Now we will move on to the chapter 5 and problem A. So it's P 5之一 A. Okay. So now we will read the question together. The Ready Set Go company distributes suitcase. So now we are dealing with a seller who sells the suitcase to the retail store. Okay, so they have a credit terms discount here. If you pay in for each customer, from now on, I will use I to represent our company, okay? The Ready, Set, Go company. So, our company has a discount. If our customer pay in 10 days, we will give him 1% off discount. But every sales need to pay the cash. Every business need to pay the cash in 30 days. Okay. So now, at the end of June, our company inventory consists of suitcases costing 1,200. So this is our inventory at the end of June. So here is about the July. So then we know the ending inventory of June is the beginning inventory of July. Okay. So the question here is the business happening, and the question asks us to do the journalize and transaction for the month of June for our company using here perpetual inventory system. So for the perpetual inventory system, we need to record when we buy in and when we sell out. Okay. So for the July 1st, here it means we purchased the suitcase from the trunk manufacturers using the FOB destination. Okay, so now we need to think about what is FOB destination first. FOB destination means they will transfer the goods to another people at the destination. So it means the seller will pay for the transfer fee. Okay. So now we are the buyer, not the seller. So the seller should pay the transfer fee for us. Okay, so we only need to record the suitcase is our inventory, right? So we buy the suitcase, our inventory will increase. And because it's on account, so our account payable will increase also for 1,500, for 1,500. Okay. So for the July 3rd, we sold the suitcase on account to Satchel worth for 2,200. And the cost of suitcase is 1,400. Okay. So first, when we sell something, we will get the sales revenue. Okay, but because this one is on account, so we only increase our account receivable, not cash. Okay, so it's for 2,200 and 2,300. Okay, when I say we need to record when we buy the goods in and when we sell the inventory out, it means we need to record the cost price, the cost of goods sold. Okay, so here we need to record the cost of goods sold and the inventory become less. So how much is 1,400 and 1,400? Okay, so at July 9th, we pay the trunk manufacturers. Okay, so the trunk manufacturer is here. Now we are going to pay it. Let's see how much days. From July 1st to July 9th is 8 days past. Okay, so check the July 1st when we do the business with trunk manufacturers. It says there is the terms. If we pay in 10 days, we got 2% discount. Okay, so we have the 2% discount. Let's calculate first. How much is 2% discount? So 1,500, 2% discount is, okay, $30. Okay, so now we need to pay the cash. So the cash will become less. And before we was record this business for accounts payable, so now we are going to pay for the accounts payable. So the account payable will become less also. And the difference between them will be the because this is a perpetual system, so it will be the inventory. Why? Because if we buy something on the internet, for example, for clothes, if we say it's 1,100 for one clothes, but the transfer fee is $30, then actually the clothes for us is 130, right? But now it says we don't need to pay this transfer fee because we are using the FOB destination. Okay, so now the clothes actually only worth 100, but we was recording it for 130. Sorry, this is not a good example. It's, for example, like usually the clothes is worth 100, but so we record it as 100, but now the seller give you a special discount for 80%, for 20% off. So for 20% off, but for the Taiwanese is 8折. 8折 means 80%. Okay, actually I just want to explain the clothes will become cheaper, not 100, maybe only worth $80. So we need to less the inventory's value by $20. Okay, so for here, the cash on the account payable, it was 1,500. So but for the for the cash, actually how much we only need to pay, because we got a discount for $30, so we only need to pay 1,500 minus $30, so it's 1,470. Okay, so the difference between them we'll put on the inventory. Oh, sorry. This is on the right side, wrong side. See, the debit side is bigger, the credit side is smaller. So the inventory for $30. Okay. You can see we decrease the value of inventory because actually from the July 1st our inventory is worth 1,500, right? But now we are putting on a different side, so our inventory actually becomes cheaper. It's only worth $1,470. Okay, so you don't need to write this one. Okay. So we keep going on. For the July 12th, we received the payment from the Structure World. Okay. So it's here. The question already tell you at this question already tell you at the beginning. We have 1% discount for our customer who pays in the 10 days. Okay. So from the July 3rd to July 12th, it's only 9 days past, so they got the discount. Okay. Okay, so now they are going to pay me cash for the account receivable. Then how much is 1% discount? The account receivable was 2,200 and 1% is 22. Okay, so we write it here, 22, just as a record. So the account receivable will be 2,200 and the cash will be less than 2,200. Okay, so now we know our sales discount will be right at the debit side because we need to make it balance. If we are going to put the smaller number in for cash, then the credit side will become bigger. So we need to make it balance. So here will be 2,178 for cash. Okay. Okay, so we are moving on for the July 17th. Okay, so we sold a suitcase on account to Lady Gogo for 1,400 and the cost of suitcase sold was 1,010. Okay, so the same. When we are selling the goods, we got the sales revenue. They didn't pay me cash, so my account receivable will increase. My inventory will go less because the inventory becomes cost of goods sold. Okay, so we just write the number. The question gives us 1,400, 1,400, 1,010, 1,010. Okay. Then we move on for the July 18th. We purchased the suitcase on account for 1,900 from the holiday manufacturers, and it's a FOB shipping point. So what is FOB shipping point? It means at the beginning when the goods is moving out from the manufacturer's warehouse, it becomes our goods. So we need to pay for the transfer fee. Okay. So the transfer fee, like I was explained, if the clothes, it says, this clothes is 100 already, but it tells you you need to pay for the transfer fee for $30, then the clothes actually will worth $130 for you. Okay. So later we will put the money we paid to our inventories. Okay, so we read the question. Purchase the suitcase the shipping point, and the term is okay, we don't need to read the term now because later we will use it later. Okay, so it say they pay the cash for $125 for the flight on the same day. Okay, so when we purchase the inventory, our inventory will become more, and we didn't pay it in cash, so our account payable will be more for 1,900. Okay, so now we are going to pay the transfer fee. Okay, because the transfer fee actually means our inventory become more expensive, so we write the inventory directly and we pay the cash for 125. So you need to know in your heart this inventory actually represent the money, the extra money we paid for the transfer fee. But you can't write on transfer fee, okay? Because this is a perpetual inventory system. So you do the adjusting value on the inventory directly. Okay? So remember, there is no freight in for the perpetual system. Okay, so we move on the July 20th. Okay, we receive 300 credit, include the freight for suitcase return to holiday manufacturer. Okay, see the question? We receive 300 credit because we didn't pay the cash, so we are not receive the 300 cash. Okay, so it means we will reduce our accounts payable. We don't need to pay that much because we return the some suitcase to the seller. Okay, to the holiday manufacturers. Okay, so if we return the goods, our inventory will become less and our accounts payable become less. That's it for 300. Okay, so we keep moving on July 21st. Okay, we received the payment in full from the Lady Gogo. So we was doing a business with Lady Gogo at July 17th here. Okay, so we received the cash, right? So we know the cash will increase and the business with Lady Gogo, it was account receivable. So here account receivable will become less, will disappear actually. So for 1,400. Okay, so we checked from the July 17th to July 21st is 4 days past, so she got a discount. Okay, so our sales discount is 1%. Okay, so 1% is $14 here, so here will be 1,396. Okay, that's it. So now we will move on for the July 22nd. Okay, we sold a suitcase on account to the Vagabond for 2,250 and the cost of suitcase. Okay, now we are selling. Okay, selling on account, so there is account receivable, sales revenue, and we need to record our inventory to the cost of goods sold less inventory. Okay, it's very repeating. So here the account receivable will be 2,250, and the cost of goods sold by the question give us is 1,350 and 1,350. Okay, that's it. So at July 30th, we pay the cash to holiday manufacturers. Okay, so we was doing a business with holiday manufacturer at 18th, but we have been returning the goods on the 20th. Sorry, here we was doing business with holiday manufacturers on 18th, but we return some goods on 20th. Okay, so totally how much we should pay? Totally our account payable will be 1,900 minus 300 because we return the goods. Okay, so the account payable will be 1,600 because 1,900 minus 300. Okay, so we need to pay in cash. Do we got a discount? Let's check the question. On the 18th, it says there is a discount if we pay in 10 days. Okay, let's see if there is 10 days. We need to calculate from the first day. Okay, it means July 18th. So from the July 18th to July 30th, oh, it's 12 days already, so we don't have a discount. So we need to pay the full cash, plus 1,600. Okay, so the last one will be July 31st. So the guaranteed vagabond, our customer pay the, oh no, it returns the goods, which is costing 120, but we will sell the goods to them for 200. Okay, so when do we do the business with them? At July 22nd. Okay, so I will do it here. Okay, so you can compare. So now our account receivable will become less. Okay, just remember, don't touch the sales revenue. When you sell the goods, you sell the goods. Because you can think like this. Actually, they want to buy from you, but there is some problem with your goods. So they return the goods. Okay? So, for the successful businessman, you need to improve yourself for this problem. So the accounting people should help you to record this problem, and at the end of year you can still see why my sales revenue will become less, for what reason. So we will create another account for sales, return, and allowance. So at the end of year, you want to see your net sales, you can see, okay, my sales revenue, for example, is 1,000, and the discount for customer, for example, is $20. But the sales return and allowance is like 100 or 200, then you need to be careful. Okay, so remember, don't touch the sales revenue. Okay, when customer returns our goods, we will use the sales return and allowance to help us to reduce the account receivable. Okay, so it's 200 and 200. This is the money we sold the goods to them, but how much the goods was worth to us originally, you need to see here the cost of goods sold and inventory. Okay, So we didn't sell all the goods come back. So our inventory is increased and the cost of goods sold is decreased. For how much? The cost price is $120. $120. Okay, that's it. Then we finish this question. Later I will do the same the same problem A, but I will using another systems, the period inventory system, to help you to understand these two systems much better. But it's not important to compare what's different between these two systems, unless you are very familiar with each system, okay? I just want you to think it in different way, okay? If you are doing the perpetual, only think about the perpetual. Do adjusting on the inventory. But if you are doing the period, then we'll have another account to do it, okay? Don't miss up then.